Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's state planner on Thursday called for an all-out effort to prevent shuttered illegal steel capacity from restarting as it looks to ensure the country doesn't toss away progress in supply-side reform right at the end of a 5-year campaign. China, the world's top steel producer, has already exceeded its goal of cutting 100 million to 150 million tons of annual crude steel capacity during 2016 to 2020. As of end 2019, it had already cut more than 150 million tons of outdated capacity and another 140 million tons of low-grade steel output.
Peru's miners are revving up stalled operations with mass testing, isolation periods and revamped shift patterns, setting up the world's number 2 copper producer to hit 80% of production capacity by the end of June, industry officials said. The restart is key to Peru's economic engine and metals output, which was devastated by the coronavirus pandemic and a nationwide lockdown. But unions for mine workers have voiced concerns that some planned shifts are too long while testing and protective measures need to be strengthened. The mining and hydrocarbons industry, the top driver of Peru's exports, fell over 40% in April, with output of copper, gold, zinc and silver down sharply. Companies are scrambling to avoid falling further behind larger neighboring producer Chile, which has maintained production through the pandemic.
Moving on to the top news in the energy sector.
An OPEC Plus ministerial panel met on Thursday to review record oil supply cuts and plans by countries such as Iraq and Kazakhstan to improve compliance with their output quotas in a bid to support oil prices battered by the coronavirus crisis. The Organization of the Petroleum Exporting Countries and Allies, known as OPEC Plus, have been cutting output by a record 9.7 million barrels per day (BPD), or 10% of global supply since May 1 after oil demand plunged by up to a third due to the crisis. OPEC Plus agreed this month to extend those record cuts until the end of July to provide further support to the market. After July, the cuts are due to taper to 7.7 million barrels of oil per day until December.
Fuel demand across Europe is staging a gradual recovery after hitting record lows at the height of coronavirus lockdown measures in April, but it remains well below normal levels for this time of year, data from several countries shows. The International Energy Agency said that European oil demand fell by 690,000 barrels per day, BPD, in the first quarter and 3.3 million BPD in the second quarter. It expects the fall in demand to slow to 1.3 million BPD and 570,000 BPD in the third and fourth quarters respectively.
We will now look into agricultural price moves.
Raw sugar futures on ice eased on Thursday as weakness in global equity markets heightened concern about a potential fall in consumption this year. July raw sugar SBC1 was down 0.11 cents, or 0.9%, at 12 cents per pound at 14:41 GMT. September London cocoa LCEC2 rose £10, or 0.6%, to £1,682 a tonne, with the market rebounding, after equaling the previous session's low of £1,663, the weakest level since May 2019. September Arabica coffee KCC2 fell 1.2 cents, or 1.2%, to 96.95 cents per pound, having hit a 9-month low of 94.55 cents on Monday.
Chicago soybean futures edged lower on Monday, though the market traded near a 2-month high touched in the previous session on support from strong demand for U.S. supplies, while corn gained as higher oil prices boosted hopes for ethanol demand. The most active soybean contract on the Chicago Board of Trade SV1 was down 0.03% at $8.67 minus 1/2 a bushel, as of 10:55 GMT, not far from Friday's highest since April 1 at $8.74 a bushel. Corn CV1 rose 0.7% to $3.33 minus 1/2 a bushel, while wheat WV1 was up 0.05% to $5.15 minus 1/2 a bushel.
Next we have energy price moves.
Oil prices rose slightly Thursday as a panel of OPEC and its allies met to review record oil supply cuts, even as the market remained concerned about additional coronavirus cases reported in parts of the United States and China. Brent crude LCOC1 futures were up 54 cents at $41.25 a barrel by 15:23 GMT, and U.S. West Texas Intermediate (WTI) crude CLC1 futures rose 59 cents to $38.55 a barrel. The Organization of the Petroleum Exporting Countries and Allies, known as OPEC+, have been cutting output by a record 9.7 million barrels per day (BPD), or 10% of global supply since May 1. Thursday's discussion was unlikely to recommend an extension of record cuts into August, sources said. OPEC+ compliance with production cut commitments in May was 87%, two OPEC+ sources said on Wednesday.
Malaysian palm oil futures ended flat on Thursday, although another wave of coronavirus infections and expectations of higher production clouded the vegetable oils demand outlook. The benchmark palm oil contract FCPOC3 for September delivery on the Bursa Malaysia Derivatives Exchange closed unchanged at 2,361 ringgit, $552.28.
Moving on to metal price moves.
Copper rose on Thursday as top consumer China signaled plans to maintain liquidity in the financial system for the rest of the year, raising hopes of improved demand for metals. Benchmark copper CMCU3 on the London Metal Exchange, LME, gained 1% to $5,825 a ton in official trading. Copper is on track for fifth weekly gain, which would be its longest winning streak since December.
Finally, we will update on the most recent USD Index.
The US dollar and Japanese yen strengthened on Thursday as concerns about a rise in new coronavirus cases underpinned demand for safe haven currencies. An index tracking the dollar against a basket of currencies equals USD was up 0.20% in New York morning trade to 97.267. The dollar has strengthened in recent weeks as investors grappled with fears about the COVID-19 pandemic's impact on economic growth. The Japanese yen was last 0.32% stronger at 106 Japanese yen and 66 sen equals, the highest since June 12, and close to the one-month high of 106.58 it rose to last week.
That is all for today's news. Stay tuned to TradeFlow TV as we continue to provide you with updates on the commodity market. You can also follow us on Twitter at TradeFlowDV1 to receive information from there.